let's get across what is moving markets at the moment. Luca Santos joining us from ACY Securities. Luca, welcome.
Good morning. Long time to see you.
Yeah, it's been a while. Always so much happening to discuss too, particularly this time of year. And yeah, the focus, of course, being on the incoming Trump administration and how that is really moving markets at the moment. You only have to look at Bitcoin, of course. However, just as far as the US economy is concerned, what are your observations, given we've got a lot of Fed speak at the moment, haven't we?
We do.
And the debate is to whether they're going to continue cutting at the pace that was expected.
Yeah. Well, we look to, so good morning, everyone. It is pretty hectic market at the moment. And as I've mentioned a couple months ago, in December, all will come over to central banks, right? It will come over to who's going to cut, who's not going to cut, what they're going to do in next year and the first quarter, and etc. So the Fed has been pretty interesting because they say that they will continue to cut, but maybe not as the projected or not as the market is expecting to do. So we have a projected 25 basis points cut for this month in the 18th of December, another 25 on January, another 25 on February, and another 25 in March. And then after that, on the first, pretty much the whole first quarter, they're looking to cut 75 basis points. But after that, on the second quarter, is not too sure. The market doesn't rely on the overnight swap rates anymore. I do believe that they can potentially cut, but they have to be very careful with inflation. Inflation is not that lower as Europe, for instance, right? We have ECB being much more dovish than the Fed, and hence why the euro dollar has been falling as well, with the US dollar strengthening because of the Trump getting in power next year. Some other topics as well on geopolitical instance to Europe. But my opinion is that yes, a continuation from cut from the Fed, maybe not 75 next first quarter, maybe 50, and we skip one and pause for the last one in March. We skip and then cut in the second quarter. But yeah, I do believe that continuation to cut this 25 basis points for sure in December, 100%. Next month as well, February maybe a pause. And this can drag the US dollar up, to be honest with you.
So what are the factors at play influencing the US dollar at the moment? We have the Fed and its projected cuts, but also Trump and the effect he's likely to have on the US economy, with tax cuts is a focus.
Well, that's one thing, but tariffs as well, right? We're having the tariffs. But I was actually talking to some people last week. He can say whatever he wants right now, right? He can tweet, not tweet anymore, but the X. He can post on X whatever he wants. But will he do this? It's another story, right? Because he's not on power at the moment. But the market seems very sensitive of whatever he says. It's getting felt on the actual US dollar. I think the 100% tariffs, it's a little bit too crazy for the BRICS nation, for Brazil, Russia, India, China, and South Africa. I don't think he should do that because they are the biggest exporters as well from US. All those 4 countries combined, 5 countries, 4 countries combined, they have a big exportation number on the whole globally, right? I think what is moving the US dollar at the moment is Trump, new administration, whatever he's posting on X. It's doing some sort of move on the US dollar. For sure, the FOMC and the Fed. Job numbers data as well. We're going to have today, midnight 30, tomorrow midnight 30, we're going to have the release of NFP, average hourly earnings, and employment change. This is going to be very crucial as well. I'm expecting a little bit of in line of the consensus, 212,000, 210,000 for NFP. Just bear in mind that the employment change is coming higher, so it's 4.2% at the moment. Unemployment change, is coming high at 4.2%. It was 4.1, now it's expected to 4.2. So, but I think it all will come down to the Fed, to be honest. I think whatever Jerome Powell says is what the market will listen, and that's what they will be looking for next year.
So when we then look at the Aussie dollar, what's at play, given it's continuing to weaken at this point relative to the US dollar?
Well,
and we obviously have the strength of the US dollar, but also the prospect of rate cuts here, and also given it's a proxy for China, essentially.
Well, the GDP was a big take as well. The gross domestic product coming much lower than what was expected for the yearly and for the quarterly as well. And this is driving the Aussie dollar down as well. It's funny how the interplays of interest rates are playing, because we have some central banks doing the 25 base points cut, even 50 base points cut, and continue to say that they will continue to do this. And then we have RBA saying that it's not yet the time to do a cut. 98% of the market is not predicting a 25 or 50 base points cut, whatever, for this month, either for next month. So I do believe that RBA will continue to hold. And I've mentioned that on January or February when I came here. I say, look, RBA will be one of the last ones to actually do the cut. Unfortunately, I love my country, but unfortunately we are not on very good paces. We have GDP going, contracting, and mortgages is still being laying out to people. So people is still spending money, and feels like that all of what they've saved for the last 2 years, they're spending now on buying properties and etc. Even the rates are a lot higher, so they pretty much don't care. And this is fulfilling the inflation, continue to fulfill inflation. So RBA has a really, really tricky problem for them to solve, and I don't think it's the time to do a 25 base points cut anytime soon.
Where do you see the Aussie going to?
Aussie against US dollar?
Yeah.
Most likely, we're trading at 64, 65 right now. I think 63, 62 until first quarter next year, and then 60 for the whole next year.
60?
Yeah. I do believe on that, yeah.
Well, you're not alone, because I spoke to someone earlier, a technical analyst this morning, who was looking at 60 as well. So obviously remaining depressed over the course of 2025.
Well, it's all going to depend on how the RBA will actually take the data that they have on hand next year. As I say, the GDP is contracting and people are still spending, and inflation is still, is still coming low. Yes, we're 50% lower than what we were 2 years ago, 60% lower than what we were 2 years ago, but it's not enough. I don't think it's enough.